Welcome to the deep dive. Today we're really getting into the EV investment scene.
That's right, focusing particularly on Tesla, TSLA, and Rivian, which is IVN.
Exactly. And our goal here is pretty clear. We want to help you unpack what's happening right now, spot the risks and the growth potential.
And find those strategic entry points based on the research we've looked at.
Yeah, definitely. The overall vibe we're getting is that the EV sector, it seems like it's really setting up for a potential bounce back next year.
It does. And what's interesting is how that lines up with bigger economic stuff.
Like what specifically?
Well, things like consumer discretionary ETFs,
Mm-hmm.
the funds tracking non-essential goods, they often jump when the economy shifts.
Ah, okay. And interest rates too, right? Everyone's watching those.
Exactly. Interest rate expectations are a huge piece of this puzzle.
So let's talk about this market rhythm. The research describes Tesla and Rivian as being stuck in a box range right now.
Basically consolidating. Their stock prices aren't making big moves, just bouncing between certain levels.
Right. So what's going to kickstart that upward trend we mentioned for next year? What are the actual, triggers?
Good question. Several things could do it. Potential interest rate cuts are a big one.
We're okay.
Then you've got policy stuff like the yield curve may be shifting or new EV incentives.
That's supply and demand. Does that play in?
Definitely. Things like getting included in more ETFs or even just more chatter on social media can build momentum. These things together could push them out of that box.
Okay, let's switch over to Tesla. Innovation is kind of their middle name.
Sure.
The research points to low-cost models coming in late 2025, and then the really long-term stuff like robotaxis and AI.
Yeah, the future vision is always front and center with Tesla.
But how much does that future stuff help now? They've got real risks, like those regulatory credits running out, right?
That's the tricky part. Those credits were a nice boost, but they're expected to phase out by 2027.
And the Q2 numbers weren't great either. Revenue down, earnings per share down.
Yeah, worst in 3 years, apparently. Plus, weakening brand loyalty is a concern, and sales slowing down in China. It's a mixed bag.
So their market rhythm is reflecting that.
It seems so. Kind of a weakening or adjustment phase. There was that MACD dead cross signal, often bearish.
Though you see some short-term bounce attempts.
Exactly. Little upward tries, but the bigger trend looks weak right now.
Okay. Now, Rivian. They seem to be playing a different game, relying heavily on partnerships.
Very much so. You've got huge names like Amazon and Volkswagen involved.
Plus, expanding their charging network and being tied into Amazon's logistics sounds pretty solid for growth potential.
Absolutely. Those partnerships are key. But they're still losing a lot of money.
Ah, the profitability question. Still a ways off.
It seems delayed, yeah. And the EV space is just incredibly competitive. Plus, they're sensitive to government incentives changing.
So what's their market rhythm look like then?
A bit more optimistic, potentially. Maybe entering an expansion phase. The RSI, the Relative Strength Index, is near 50.
Which can sometimes signal a bounce, right?
It can, yeah. Or at least a potential shift in momentum.
Yeah.
Not a strong trend yet, but maybe turning.
Okay, so we have these two different stories, Tesla and Rivian. For you listening, how do you turn this into an actual investment strategy?
Well, the research talks about a split entry approach.
Split entry, like not putting all your money in at once.
Exactly. Divide your investment into maybe two parts. Enter at different points based on that market rhythm, support levels, resistance levels.
So it smooths things out, reduces risk a bit.
That's the idea.
Yeah.
Enhances stability, maybe improves your win rate for swing or midterm holds.
And there was mention of a VPAR technique.
Yeah, volume profile anchored range. It's a way to monitor key price levels live, especially at those turning points. Helps visualize support and resistance zones based on where trading volume has been heavy.
Interesting. And does the public mood match these technicals?
It kind of does, actually. Social media mentions for keywords like rate cut and robotaxi are up. Reddit activity on EV and Tesla forums is up like 18%.
Wow. And Twitter?
Yeah. Twitter mentions for hashtag Tesla and hashtag Rivian hashtags jump 55%, and general sentiment seems pretty bullish.
Bullish? How bullish?
On stock twits, for example, something like 68% for Tesla and 72% for Rivian. So retail investors seem pretty optimistic overall.
Okay, so let's wrap this deep dive up. The EV sector is clearly very dynamic.
Absolutely. Lots of moving parts.
And for you, thinking about investing a strategic approach, using this idea of market rhythm, support, resistance, it seems crucial.
Understanding the specific company risks and growth paths is key too. You can't just look at the sector as a whole.
Very true. So here's something for you to chew on.
Yeah.
How might Tesla's big bet on AI and robotaxis and Rivian's partnership-heavy growth, how might that change things? Not just for your investment portfolio, but, for the future of how we all get around, sustainable mobility, smart cities.
That's a big question. It could redefine a lot more than just stock prices.
Definitely something to think about as you navigate what's next.